Hi there, I'm Paul Bagnall. Welcome to Market Call here on BNN Bloomberg. Kim Bolton is on the show today. He's president and portfolio manager at Black Swan Dexteritas. He's an expert in tech stocks, and that is the subject. He'll take your questions on tech stocks. So please do give us a call at 1-855-326-6266. That's our toll-free number. Or you can shoot us an email at marketcall@bnnbloomberg.ca. So we'll get to your questions in the next segment. In the meantime, we'll bring in Kim Bolton right now to talk about his views of the market and the tech landscape. Investors look at a NASDAQ composite, which is up more than 30, maybe 35% so far this year. Kim, what do they need to understand about that rally?
Well, it's August. So August is always a really squirrely month of the year. There's not a lot of data. Earnings season is over. But, you know, the big money institutional guys go on holidays, and you got the technicians, and then so you got to follow the technicals in August, and there's some opportunities. So markets rolled over. You know, the NASDAQ futures are off almost 1,000 points from 16,000 down to, 15,100. So there's some opportunities, and we've been nibbling away. But we still have a pretty significant hedge in our fund and across the separately managed accounts.
You note that the NASDAQ composite has broken down below its 50-day moving average, did so recently for the first time in more than 100 days. Is that one of the technicals that you're talking about?
Yeah, I think it's, it was just over 100 days, and that's got to be like the fourth or fifth longest running period that the NASDAQ has been above the 50-day moving average. You know, this is either sort of a consolidation period, or they're probably going to try to test and see how much lower it can go. It's you know, it is run this month by a lot of technicians, so a lot of people have been talking about this teacup formation that's happening. You know, so you had the big, you know, the cup, and then it sort of came up this year, and then this is sort of the handle. You know, historically, that when you get a teacup with a handle, that's a bit of a bullish signal going into the fall. That's what we think.
The big mega caps that provided leadership not only to the tech sector but to the broader S&P 500 as a whole have also broken down below their 50-day moving averages recently. We're talking about Apple, Microsoft, NVIDIA, and Tesla. What is the takeaway there?
Well, that's half of the Magnificent Seven, right? So some of them are still staying above it. You have NVIDIA that's going to be coming up at the end of this month with their earnings, so that'll be very, very, very important. But yeah, well, you know, it's not just a big mega cap. You know, in the latter stages of sort of the second quarter, you had a lot of the software stack, which is all part of the AI side of it. So you have the cloud, you have the enablers with the semiconductor, NVIDIA, AMD, and so on. And then you finally had the software guys start to take off. But they're starting to roll over, too.
Where are you finding opportunities? What's segments of tech?
We still, you know, we're still pretty fully loaded when it comes to the infrastructure, you know, those cloud guys, Microsoft and Amazon and Google and Oracle and Alibaba. You know, when it comes to the enablers, it's mainly NVIDIA. However, AMD just announced that they're going to be coming out with something that is very, very competitive, not just on the CPU and the GPU, but also on the accelerator side. And that's going to be rolling out the end of this year. So AMD is interesting. And then, you know, when you look at the software stack with some of the big guys out there, like a ServiceNow or a Salesforce, you know, very, very profitable companies, we'd look to those too.
That is Kim Bolton at his view of the landscape in technology. He's president and portfolio manager at Black Swan Dexteritas. He'll start taking your questions on tech stocks right after this, so give us a call. Welcome back to Market Call. Let's start putting your questions to Kim Bolton. He's an expert in tech stocks, and that's the theme. Our first email comes from the inbox of our email account. Catherine is the email writer. The subject is Quisitive Technology Solutions, ticker symbol QUIS, on the, looks like the Canadian Venture Exchange. I'd like to get your thoughts on Quisitive, please, she writes.
Thank you, Catherine. Quisitive. We follow it. We don't own it. It's sort of a tiny company. It's just over 100 million in market cap, and you can see in the chart here how it's sort of rolled over. But Quisitive, it's an interesting company, and it's headquartered here in Toronto, and basically they are a provider, a reseller of Microsoft solutions, you know, going all the way from Azure to Dynamics to 365 and so on. And also PayIQ, which is a cloud-based sort of payment processing and payments intelligence platform. So anyway, you can see that it took off during the pandemic, and then it's sort of come back down to earth. It just hasn't got the flavor of the day that they had during the pandemic. Currently trading right around 27 cents. The average analyst out there has a 12-month price target of 40 cents.
Okay, thanks for the question, Catherine. Let's go to Mo. Mo is also an email writer. The subject here, Palantir Technologies, ticker symbol PLTR on the New York Stock Exchange. What are your thoughts, Mo writes, on Palantir Technologies? Do you still own it?
Thanks, Mo. No, we haven't. We've been in and out of Palantir, and you can see it on the. This is one of the companies, Paul, that did a. It wasn't an IPO. It was just an issue that they did on. I guess it was on the NASDAQ. On NYSE. But anyway, it did very, very well during the pandemic, sort of came back down to earth. Palantir, it basically has two analytical platforms. And you can see that it's sort of taken off here because of the whole generative AI. They are very much the king and the go-to place for people that are involved in AI, machine learning, artificial intelligence, and they have two sort of platforms. One is Gotham, the other one is Foundry. Gotham services the government clients around the world, and the Foundry is more the enterprise. Total addressable market for these guys is massive, up around 120 billion. And then the business that they get, both from the government and also from enterprise, from corporate clients, is very, very sticky. And the average contract length is 3.6 years. So we do like them. We think that they're a little bit pricey here. That's why we don't own them right now. Currently trading at about $15.50. The average analyst, we actually have the price target of 16.25. The average analyst out there actually has the 12-month price target of $14.40.
Okay, thanks. Let's go to the phone lines for the first time in this program. Taraver is in Phoenix, Arizona. Hi, Taraver. Welcome back to the show.
Thank you, Paul. My question, Mr. Bolton, is on Alphabet Google. Now, they make nearly all their profits from search engine or online advertising, but they have what is called an other bets category, various little businesses that never make money, always billions of dollars in losses, including they believe like a wind energy type thing. What does that say about Google? Why are they spending money here instead of like a ChatGPT or AWS? Thank you.
Mm-hmm. It's a good question. You know, we own Google. It's in our top 5 pretty well across all the separately managed accounts and even in the funds. You know, they make the majority of their money out of advertising. They're massive into that side of it. And then they have also the cloud, and, you know, they have Google Maps and Google Play, but of course, other bets. You know, a lot of these things actually came out of other bets. And so they're not as willing to spend as much money as like a Meta Facebook. But, you know, you need those other bets. And, you know, when you're It's just an absolute money machine when it comes to the advertising on their Google search. And then they direct that. You know, actually, if you think about it, Bard actually, which is that Lambda, which is the language model for dialogue applications, that actually came out of the other bets. They've been doing that for the better part of a decade. And then, you know, of course, Microsoft last November, December came out with their ChatGPT on their platforms. And then it really sort of forced the hand of Google to bring out BART and also the Lambda. So, you know, that is the incubator for the future. And so they do have to spend it. And everyone does it, right? Meta does it. Microsoft does it. Amazon does it. Even when you look at the new ones in the Magnificent Seven of NVIDIA. NVIDIA has other bets out there. So it's important to have that incubator.
Okay, let's get one more question in before we take a break. Costa is in Montreal. Hi, Costa.
Hello, gentlemen. Thank you for taking my call. Mr. Bolton, I would appreciate your thoughts on Constellation Software going ahead this year. They reported earnings last week and possibly a price target. Thank you very much. Have a nice day.
Thanks, Costa. So we own it. We like it. They are the king really around the world when it comes to the vertical integration. You know, most software companies, which Constellation is primarily a software as a service, infrastructure as a service type company, and so we expect them to continue to grow. However, they're becoming a massive company, and they have dozens of companies in their various silos on those vertical segments. But for one of them to actually have a big impact into the whole pie is becoming difficult, and that's why it's sort of plateauing right now. So currently, if you could pull up the chart, the currently trading just around 26.60. We have a 12-month price target of 27.80. So that's why we still own it.
And the 12-month price target, as derived by a survey of Bloomberg News of analysts. Now, there's only 8 analysts in that survey, but that survey of analysts by Bloomberg results in a consensus price target, 12 months out of nearly $3,050 dollars per share Canadian, and the breakdown of buys versus holds is 6 buys, 2 holds. We will be back with Kim Bolton right after this. He's president and portfolio manager at Black Swan Dexteritas. He'll continue taking your questions on Tech Stocks. Welcome back. Let's continue with your questions to Kim Bolton on Tech Stock. Let's go to Chilliwack, BC, where Frida's on the line. Hi, Frida.
Hi there. I'm interested in your take on Shopify going forward. Thank you.
Thank you very much for your call. Shopify, yes, we own it. We love this company. We've trimmed a little bit lately. Currently, and you're working off of the TSX side, so just shy of $75. We have a 12-month price target of $61.50 US, which would work out to probably just around 82, I guess it would be. You know, everything is working extremely well for them. This is the pride and joy of Canada when it comes to e-commerce as a service, servicing small, medium-sized companies. They're in 175 countries around the world. The platform is used by e-commerce on the front end, but also on the back end when it comes to managing inventory and orders and payment and shipments and capital, working capital financing and so on. So they got, which was a very smart thing to do, they divested themselves of that fulfillment side, and now they're focused on what they're really, really good at doing, and that's their e-commerce as a service. It does have enough volatility in it that once it gets up close to that sort of 80 level, definitely recommend that you trim it off because, during the fall, you're going to have a heck of a lot of volatility in the marketplace and you'll get an opportunity to get back in.
Okay. Thanks for that question, Frida. Let's go to Montreal now. Ken is on the line. Hi, Ken.
Hi, Paul. Hi, Kim. Thank you for taking my call. I'd like to know, Kim, about Micron Technology, if it's a buy or sell, and if you have a target on it. Thank you.
Thanks a lot for your call. Micron. We're not in it actually right now. We took some profit. It's interesting because right now it's trading at a 66.5. It was up just north of 68, which we trimmed it back. The average analyst out there has a $69, I think, Paul, 12-month price target.
Get on that.
So Micron is very much the king of sort of the digital memory, DRAM side of things. And then on the other side of it, you have, the king of the analog is this Texas Instruments. But, the flavor out there these days, of course, is into the GPUs, the CPUs, and then the combination of the memory that Micron is involved in, together with the CPUs and the GPUs that, you put it all together and you got these accelerators that are essential when it comes to the generative AI. So 2/3 of Micron's business is in DRAM. A lot of the analysts and research people, particularly when you look at someone like a Gartner out there, are sort of talking about an oversupply in the market when it comes to the DRAM, which, but the stock has done tremendously well. So we look for an opportunity to actually get in closer down to sort of $62.
Okay, and Bloomberg, the consensus call on Bloomberg here is an aggregate price target from 29 analysts surveyed. Actually, 37 analysts surveyed, $76.67 US. And 26 buys, 9 holds, 2 sells on that stock. Let's go to Henry in Vaughan, Ontario. Hi, Henry.
Thanks for taking my call. I'm calling about Taiwan Semiconductor. I'm an optimist, and I don't think that China will take over Taiwan. Let's forget the political aspect totally and say, what's the long-term view, 5 to 10 years on Taiwan Semiconductor? Thank you very much.
Thanks a lot for your call. So, yes, we own it. We trimmed it a little bit lately. It got all the way up, gosh, I guess it was a couple of weeks ago, got all the way up to about 107 US, which was the average analyst 12-month price target was around 107.5. So they're the biggest foundry around. They have to service all of the designers, the NVIDIAs and the AMDs and so on. So they're running at full steam, but they also have a big challenge when it comes to producing these 3 nanometers chips out there that are used for the AI. So currently down here at 93. Buy it down here. I think you can probably, over the next few weeks, also pick it up down at 88 and maybe even down the low 80s.
Okay. That is another batch of questions from you to our expert guest, Kim Bolton, on the tech stocks. When we get back, we'll take a look at some of Kim's past picks up next. Welcome back. It's time now for past picks. We'll go back in time to September the 7th of 2022, so about 11 months ago. Kim was with us, and top pick on that day was Atlassian. Ticker symbol there is TEAM, T-E-A-M, on the NASDAQ, recommended at $235 and change, now trading at just under $198 US. That's a return and total return of negative 16%. Kim?
The average 12-month price target on Atlassian now is about 201.5. So we owned it. We took some profit. This is Atlassian. It's actually out of Australia. It's a really interesting company because they provide a software solution to enhance productivity with technical and business teams. So they very much cater toward developers. Developers that are producing apps that go into the various, Apple Store and so on. But their software as a service is really divided into 3 areas: project management and support, collaboration, and software development lifecycle tools. Really, really like this company. It's one of the profitable ones in that software stack. It's really sort of cornered that developer side of it, but it's also a bit of a favorite out there, and that's why it's sort of taken off and got up very, very close to the price target. We would love to be able to get back into this, but probably would not touch it, I don't know, until it got down into the low 190s, 180s, and if you could ever get it in the 170s, it would be a bargain.
Okay. Top pick number 2 on that day, MasterCard, ticker symbol MA on the New York Stock Exchange. There you see the numbers, a total return of 21% over that time. Why is this stock a tech stock? Do you consider this a tech stock?
Absolutely.
Okay.
Next to Visa, they're the king of transaction processing and other sort of payment-related products and services, not just in North America, but internationally. Interestingly, it just hit the tape this morning. MasterCard bought Africa's largest cellular network. I believe it was called MTN. They spent like over $5 billion into it. Interesting, eh? For a credit card company to actually buy into a cellular company down in Africa. It's just an absolute money machine. It reported back on July 27th, like a lot of the payment processors. Like Visa, it beat on the top, beat on the bottom, and then extended its guidance out. Its gross payment values came in at $1.8 trillion. It is actually our 4th largest holding in our fund, and we sort of have it spread across a number of the separately managed accounts. So, buy it in around here, around $3.95. I'd leave a bit of room because I think over the course, as you go into the fall, September, October, there's always a lot of volatility, and I think you'd be able to get an opportunity to buy it down in the 380s, 370s. Okay,
and number 3 on that day, SAP, the big business software Goliath. There you see those numbers as well, a total return of 64% since September 7 of last year. Kim?
You're right, Paul. This is a massive company. It's like $170 billion in market cap. A lot of people, if you look back a year ago, were still very reluctant to actually get into a software application software company over in Europe and in Germany and so on, with everything that was going on in the Ukraine. But that's why it's popped so much. We still own it in a few of the separately managed accounts. We took the profit here in the fund. It operates through the 3 segments of applications, Qualtrics, and also into the service side. This is the company that McDermott, who is the CEO of ServiceNow, that's where he came from. So his legacy lives on at SAP. So you can buy it here around sort of 137. I'd leave some space to maybe pick it up around 130 and then down in the low 120s.
Okay. Those are Kim Bolton's past picks. We'll get back to your questions right after this break with Kim. He's president and portfolio manager at Black Swan Dexteritas. Tech stocks are the subject, so give us a call. Welcome back to Market Call. Let's get back to your questions to Kim Bolton. John is on the line from Langford, Ontario. John, welcome to the show.
Hi, my question's on Snowflake. It looks like a good buy opportunity right now for a long-term hold. I've been doing a bit of research, and I kind of want to get into a bit more of the cloud computing business. So I'm just calling to get your opinion on it. Thank you.
Thanks, John. I sort of agree with you in the long term, but you got to sort of trade around the fringes because there's a lot of volatility. So let me just sort of back up. You know, in the world of AI, and this is Snowflake has really sort of got on the wake of this AI. So you have three parts. So you got the cloud, which is the infrastructure. Then you have the enablers, which is, you know, the semiconductor, the GPUs, the accelerators. And then the third one is the software stack, which mainly means that it's sort of the semis process it and then the software actually interpret it. And this is what Snowflake. So Snowflake provides a cloud-based data platform. It's worldwide. The platform that they have is a thing called Data Cloud, which enables customers to consolidate data in a single source of truth to drive meaningful business insights, build data-driven applications, and share data and data products. So you can see where the AI comes into it in the stack. It's a funny company. It actually is headquartered out of all places, Bozeman, Montana. But currently trading at about, I think it's around 152. And you're right, John, it has a pretty decent runway ahead of it, $184.25 for a 12-month price target.
Okay, let's go to Jason. Jason's standing by in Vancouver. Hi, Jason.
Hi, Kim. My question is on Lightspeed stock. I'm just wondering if you own it or if you like it here and just what's your overall thoughts on it. Thanks.
We follow it, we don't own it. It's really done pretty well. Although everyone's sort of ratcheted down sort of the expectations on that. Currently trading 21 and a quarter. Average analyst out there, at least for us, we have a 12-month price target of $24. It's out of Montreal. It's a one-stop commerce platform for merchants. It has a bit of a history when it comes to financial reporting, so you do need to do your homework on it. But you know, I think you can probably get it down. You know, if you can get it down around 22, and then maybe add down around 20 or 19.
Okay, Jennifer is in Markham, Ontario. Hi, Jennifer.
Hi, thank you for taking my call. I'm calling about Palo Alto Network. I've been tracking this stock for a few weeks now, and I want to know if this is a good entry point and where you see this stock going, what would be your price target. Also, the earnings report coming up on the 18th, is it a good time to buy before the earnings, or should I wait, and how does it compare to Fortinet?
Okay, lots there. Palo Alto, buy before the earnings. Is it a buy or is it a sell? And how does it compare, I believe, to Fortinet?
Well, you know what I do is, currently trading just shy of 220. You could buy it here, but I do it. We always do it in thirds. You know, you buy a third, you leave 2/3, you buy another third, and then you buy the final third. So, buy a third here, buy another third down around 210. And then a final third down around 200. I love this Palo Alto because, you have the companies like a CrowdStrike or a Sentinel or Fortinet that really sort of gear in and focus on a part of cybersecurity and the security in the IT space. Palo Alto sort of does it all. And so there are flavors when it comes into the cybersecurity side. And Palo Alto is a great place to actually get it all. On top of that, Palo Alto is also good for the small and medium-sized companies. So, big enterprises will piece together their cybersecurity stack. But for smaller and medium-sized companies, they usually gravitate to Palo Alto that can sort of service all their security needs.
Okay.
Great question.
Thanks for that question. Theodore's in Montreal. Hi, Theodore.
Good afternoon, gentlemen.
Hello.
Good afternoon, gentlemen. My question is on Tesla, the near term and the medium term and the long term.
Okay, Tesla, what do you think?
We actually look to buy Tesla on sort of on the dips, which is funny because if I go back to my earlier days or even 3 or 4 years ago, you always used to sell it on the rallies. Right here, and another strategy that you might want to look at, because for a lot of these Magnificent Seven, because they're so big, they're so liquid, and then they have great option arms on either side of their stock. So, and what I mean by good option arms is that liquidity is there. So you can actually not only use Tesla and some of the other Magnificent Seven for growth, but you can also use it for income. You can sell some calls, sell some puts, and the liquidity is actually there. So currently trading at just over 235. We have a 12-month price target of 278.
Okay.
A lot of other people have it higher, though.
Okay, and I'll just to check in on that, actually, to mention that target price. What's your target price again, Tim?
278.
278. Let me check in on Tesla and what analysts say on Tesla. And I'm seeing that the Bloomberg consensus 12-month price target 258, almost 259, and of 50 analysts who cover the stock, it's almost evenly split, 21 buys and 20 holds. So there's a significant amount of caution by some analysts on Tesla. Thanks for all the questions. We'll be back with Kim Bolton after this. For more of your questions, he's president and portfolio manager at Black Swan Dexteritas. Give us your questions on tech stocks. Welcome back. Let's keep putting questions on tech stocks to Kim Bolton. Sanjay is in Ottawa, and Sanjay is our next caller. Hi there.
Hi there. Thanks for taking my call, Kim. You spoke about Palo Alto before. In a similar line, I have long resisted buying any cybersecurity type related stocks, but a couple of days ago, bought a small amount of Fortinet at $60. Given the price came down recently, I guess their earnings were good, but the market didn't like it. I wanted to, and comparing with Palo Alto, the price to earnings is, in my opinion, reasonable. It's still high, but still reasonable, given the group is trading at a much higher level. What do you think of the strategy? And in my opinion, this team is not going away. This is not replaceable. This is going to stay. Everybody needs cybersecurity for the next decades and to come.
Okay.
You're hired. You're bang on. But I'll try to add some value in here. You're right. So they reported, it was just last week or so, they beat on the top, they beat on the bottom. But Fortinet, the management team are very, very conservative. They always have been. And they actually lowered the guidance. Not a heck of a lot, like it didn't deserve for it to get like
the stock got crushed.
Yeah, it was off almost 20%. It's a great opportunity to actually buy this. Over the last 30 days, it's down 25%. Currently trading right under $60. We have a 12-month price target of $78.30. So Fortinet, just for the others, it provides a broad and integrated automated cybersecurity solution, mainly for security and networking functions. It has a firewall, it has intrusion prevention, anti-malware, It's very, very state of the art. So I think it's a great opportunity, and we also have been buying this.
Okay, interesting. Okay, let's go to Markham, Ontario, where Anuj is on the line. Hi, Anuj.
Hi, good afternoon, everyone. My question is on Topicus, which is the sister company of Constellation Software. I've been reading about this company. It's fairly probably 2-3 years old company, and I would like to buy this in my TFSA or RSP for long-term by the 10 to 20 years. I would like to know your guest opinion on Topicus.
Okay, thanks for the call.
Anuj, you're brave because this is very much a trading stock. However, I bet you in 10 or 15 years, it'll definitely be higher. It's interesting because here it is trading just shy of 102. The average analyst out there has a 12-month price target of $96. We don't own it. We would love to be able to pick it up, sort of closer to sort of 95 and 90. So basically, Topicus, it provides vertical market software and vertical market platforms. It manages and builds vertical market software and so on. It's primarily located over in Europe. And it's very much an engineering firm. Very, very smart for Constellation to actually spin this out. I think they still own 45% of it. So I don't know, 10 to 15 years, it'll be higher, but I'd also sort of trim it around the edges, Anuj, because you will get some volatility.
Okay, thanks for the call, Anuj. Let's go to Alliston, Ontario. Emily is waiting in Alliston. Hi, Emily.
Hi. Hello?
Yep. What's your question to Kim?
I would like to find out about ASML. I had it for a while, but now it's coming down quite a bit. So I'd like to find out what he sees in the future for it.
Okay.
I guess in the words of Warren Buffett, you have to love companies that have a monopoly. And ASML has that monopoly on lithography, semiconductor equipment. It's had some headwinds because they've been restricted in actually selling their equipment over in China, which took a bit of a haircut. Right now, trading at $655. It's not a bad place to. We own it. But for initial entry point, I'd say, this is a pretty good place. You can buy it here at $655, maybe down around $630, and then down at right around $600. They just had a great road show that talked about, the supply and demand and lead times and so on. But also the fact that they have a great moat around this whole thing. So we like it.
Okay, one more call. Yep. Alex is in Montreal. Hi, Alex.
Hi. Hello?
Yeah, you're on the air with Kim. What's your question?
I'd like to know about PayPal. Is there any life in that stock? Thank you.
That's well put, Alex. Is there any life in PayPal? Well, it got a little life yesterday because they just brought in a new CEO, Curtis. He was from Intuit. That's right. It's a very, very competitive space. However, they're sort of the granddaddy in this digital payments and commerce and services side. So currently trading at $63. You can see how far it's come down over the years. We have about, in the fund, we have about a 1% position. We actually bought a little bit more yesterday when this new CEO came out. He's a fantastic guy. He's great at building a team, very, very competitive. And we have a 12-month price target of $85.35.
Okay. That is all the calls we have time for today. Thank you so much for taking the time to put a question to Kim Bolton. But don't go away just yet. Kim Bolton will share his top picks right after this. Welcome back. Time now for top picks on this edition of Market Call here on BNN Bloomberg. Kim Bolton is our guest. He's an expert, of course, in the tech stocks. Top pick today, Advanced Micro Devices, ticker symbol AMD.
So this is a semiconductor stock, and you'll see a bit of a theme here still when it comes to generative AI. I remember sitting here, Paul, with Andy back in November of last year when we talked about generative AI, and it's still alive and well, and it's going to change our world. I think a lot of the market has got ahead of it, which is good for AMD, because NVIDIA, which is the king when it comes to the accelerators, and sort of in a layman's term, an accelerator chip is where you put a CPU together with like a central processing unit together with a graphic processing unit, GPU, and then putting in a memory in there too. And so NVIDIA did it very well for the gaming side. Then you remember you had that Ethereum merged last summer, and everything sort of dried up. But then all of a sudden this generative AI, which sort of lifted NVIDIA, and then you had AMD that was actually running with it. And so anyway, AMD has come out with very, very competitive CPUs, GPUs, and also accelerators. Now they're going to be coming out in 2024, which is only 6 months away, 5 months away. Mm-hmm. And NVIDIA, as they claim, that they're pretty well sold out for all of 2020, 2023, and 2024. So currently sitting at about 107.5. We have a 12-month price target of $131.20. We love this company.
Okay. Number two, ServiceNow, ticker symbol NOW on the New York Stock Exchange.
Yeah. So ServiceNow is, together with Salesforce, are the big guys when it comes into the software stack. And they're, it was founded in 2003. It went public in 2012. It has a great moat around what it has. So it actually develops cloud computing platforms that help companies manage the digital workflows for enterprise operations. It's key. And so the business becomes very, very sticky. And in fact, in that space, the total addressable market is anywhere from $200 to $220 billion out there. It's been teaming up, and a lot of companies like teaming up with it. So they've teamed up with NVIDIA, they teamed up with Accenture, the consulting side. They reported back on July 26th. They beat in the top and the bottom, and they actually extended their guidance. So, we think you can probably, pick it up here around 555, maybe down around another third around 530, and then the final third around 500.
Okay. Datadog is top pick number 3 on this day from Kim Bolton. Datadog's ticker symbol is DDOG on the NASDAQ.
Yeah. Again, this is part of that software stack in the whole AI. I always sort of talk about it, and I always refer to them as sort of the, so you have the software stack, and Datadog is like the lifeguard for the software stack pool. Mm-hmm. So it develops and monitors and analyzes solutions for development and operations and businesses. It's a software as a service company. So you're going to have, it's profitable. Actually, no, I'll take that back. It's going to be profitable come the fourth quarter of this year, which actually is accelerated from before. So Datadog's growth largely underpinned by the hyperscalers. The hyperscalers are the big cloud stocks. And so their software goes in, and the infrastructure as a service and platform as a service layers in there. So currently trading just shy of 90. And we have a 12-month price target of $107.75. I could go on and on about Datadog. I love this stock.
Okay. Well, thank you, Kim Bolton, on behalf of our viewers for all of your insight today. That's Kim Bolton. He was our guest here on Market Call. Let's take a quick look at the markets before we say goodbye and turn things over to John Ehrlichman and Bloomberg Markets. It is quite a day out there on the markets. Troubling headlines from China on economic news and the possibility of a debt default from a large real estate entity in China have investors in a selling mood today across the Western world, really. The S&P 500, as you can see, down by 0.9 of a percentage point, and that is very, very close to the decline we're seeing on the Dow and the NASDAQ composite as well. We began our show today by noting with Kim Bolton that the NASDAQ composite is up about 35% on a year-to-date basis, but it's down almost a full percentage point so far today. Let's go to the S&P TSX composite to bring it closer to home. There you see the TSX composite down by close to 2% so far today. It is a bad day for the bank stocks, the most influential decliners in order in terms of the top 5. Royal Bank of Canada, Toronto Dominion Bank, BMO is number 5, CIBC is number 8, and CNQ is also taking it on the chin. The big oil producers, the number 3 most influential decliner. Let's look at oil. Speaking of CNQ, here's a look at the price of oil. There you see the price of oil down by nearly 2.25%. Thank you so much for watching our program. As always, please consult a qualified financial advisor before making your investment decisions. Thanks for joining us. Hope to see you tomorrow. Time now for John Ehrlichman and Bloomberg Markets.